Welcome to the Startups and AI podcast. Today, I'm joined by Duncan Muchangi from PhoneBank. He's the founder of PhoneBank. Duncan, it sounds like a super interesting project coming out of Africa. I would love to learn about what you guys are building at PhoneBank and what problem you're solving.
Great. Thank you so much, Gaurav, for hosting me here. And it's a pleasure to talk about PhoneBank. Just to clarify there, so I'm a co-founder at PhoneBank. I'm joined, or rather, I have two other co-founders. We have the CEO, Chris Duffus, and then we also have our head of engineering and technology, Sage Shavchak. So yeah, to give you a little bit of context and background, what you're building here at PhoneBank. So we are an orchestration platform that basically connects between mobile money or local payments across Africa and the global south in general with stable coins. So what we identified a few years ago as stable coin are starting to become quite popular and they found utility across financial services, the global south was kind of lagging behind, right? Because they did not have the traditional banking infrastructure like the US or Europe. And so we figured out that we needed to bring local payment channels or local payment methods and bridge them to stablecoins. So, initially, to be honest, we didn't even start with local payments. We intentionally tried our first sort of, you can call our MVP. And what we did is we converted airtime into stablecoins. So for the sake of your audience, airtime is prepaid mobile credits, right? So if you want to make phone calls, voice, or, access data across Africa and many other global south markets, you have to buy sort of prepaid credits. And so our MVP was very interesting because we converted airtime into stablecoins and we created a marketplace where users who had airtime, and if you think about global south mobile phone users, more than 3 billion SIM cards existing in that part of the world, and all of them had airtime. So we were targeting a very large addressable market for anyone who had airtime, and we built a marketplace which was really successful. And that kind of gave us a very good sort of insight into how we can be able to bring on board anyone with a smartphone or mobile phone with a SIM card and airtime into the digital economy, or Web3 as they call it, right? And so we've evolved since then beyond airtime. Now we include very popular payment methods across many of the emerging markets. Mobile is definitely possibly one of the most popular and well known. So across many African countries, many users are already very familiar with mobile money. This is what they use for their everyday payments. It's what they use to send each other money. A lot of users across Africa, or especially young people, they probably will not have bank accounts. So a lot of them will probably already have mobile money. So we've evolved to support mobile money to stablecoin bridging. So across different markets, we integrate with each and every mobile money provider. And then beyond that, we've also included bank transfers. So in some markets, they have very advanced sort of banking infrastructure, similar to what you have, for example, in India, the UPI, or in Brazil, PIX. In Nigeria, they have a similar NIP system. So South Africa also have quite an advanced banking infrastructure. So now PhoneBank supports a lot, or possibly 90% of the local payment channels in Africa, and we bridge that to stablecoins. Beyond that, we've also started to look at other markets that are very similar to Africa. We started to look at Latin America. We are now expanding. We've already launched in Brazil actually, and now we are scaling from there to Argentina, Mexico, Colombia, and we're also looking at Southeast Asia, which has very similar sort of characteristics of users and infrastructure. We've already launched in the Philippines, looking into Indonesia next, Thailand, and we'll continue expanding across the global south markets because a lot of them really have very similar characteristics of users, financial infrastructure, and the demand and need is quite huge there in terms of accessing stable coins of the digital economy.
Oh, that's an amazing story, and a very unique way of gaining initial traction, where you converted the mobile, basically you called it airtime. Is it
Yes.
airtime how you call it?
Yeah. All the
So
airtime.
basically, the money that people use to talk to each other, you could use it to do like stablecoin transactions and maybe even like do other kind of transactions. How did you come up with this unique idea? Were there like other ideas that failed? How did you find this like amazing idea? Tell me a bit
Yeah.
about
So
that.
it's an interesting story. My co-founder, the CEO Chris Duffus, actually he's the one who sort of took a bet with his brother-in-law. I'm based in Kenya, in Nairobi, Kenya, so I'm very familiar with M-Pesa and how things operate here. But his brother was in Kenya for some period of time, and he spent quite about 9 months to a year here. And when he went back to the States, he went and was catching up with Chris, and he was telling him all these amazing things about Kenya and Africa in general. And Chris has a background in telecoms and fintech. He was very curious, when he started hearing stories about how people transact in Kenya. So the one thing that caught his attention was mobile money and how everyone uses it across the country. Literally in Kenya, today, I think more than 80% of the GDP per year passes through, mobile money system or mobile money
Wow.
infrastructure. So Chris got very curious, and then, he learned about airtime and, how airtime is already like a currency. People already exchange airtime and it's acceptable because, you can directly translate it into value. If you think about the US or in Europe, most people operate their mobile phones through a contract, which you pay at the end of the month, or a bill you pay at the end of the month. So the idea of buying prepaid credits or prepaid airtime became very curious to Chris. And so his brother-in-law had some remaining airtime in his SIM card. And so, he said, look, the problem is once I move to the US, this airtime cannot be used anymore. And so, you cannot really transfer the value outside that market. So in his curiosity, Chris decided that, maybe I'll take a bet and see if I can sell this airtime. And maybe, who knows, if there's, if you can sell the airtime, then you've created some form of transfer of value across borders. And so he put up a Facebook ad and said, look, I have about $10 worth of airtime. If you want it, I'll give it to you at $7 or something, right? And within a
Wow.
very short time, less than a day, he got flooded with people wanting to buy it off him. And so, he took them to a WhatsApp group. He exchanged the airtime. He sent it to the customer. The customer sent him money via M-Pesa, right? So then the brother still had his M-Pesa account. And so something clicked in him and said, look, if you can transfer airtime and someone pays you in their local currency across borders, then we should be able to leverage stablecoins and do the same thing. Just trade airtime and pay each other with stablecoins. And so that's the MVP. So, he thought, look, let's experiment with this. And, I contacted Sage, whom they were working together before. And, they put together some sort of proof of concept or MVP. And, they put it out in the market. And within a short time, because obviously there was a lot of sort of growth and a lot of awareness in terms of stable coins, people were very eager to access. And there was a big barrier to access because unless you had a bank account or a card, then you are completely excluded. So this became one of the most popular ways for anyone can just walk into a stall or an agent, buy their prepaid airtime, convert it into stable coins, and they can now start trading. They can now start sending it abroad. They can, invest, they can buy digital assets. So a whole world of opportunities opened up. And so that is how the idea came up. We kind of ran an experiment on Facebook and it worked well. And then built an MVP, put it out in the market. And it's been about 5-6 years now, slowly building and partnering with other wallet providers who now leverage our infrastructure.
Wow, that's such a fascinating story. Yeah, I've never heard a story like this. It's so amazing. Like started with a bet and then basically it came out of curiosity and
Yes,
you were able to basically find a real problem in the market where I guess a lot of people wanted to invest in digital assets anyways. They didn't have bank accounts, so it's almost like a way for banking the unbanked in a way as well. And
exactly.
what happened next? Like there's a big path from, coming up with a brilliant idea and maybe out of curiosity itself, and then actually building 0 to 1, getting early
Yeah,
traction. What were some of the biggest challenges? Because, with the crypto industry, there have been like ups and downs. There have been like, fraudulent transactions, things like that. The market has like, two sides in terms of sentiments. So how was that journey like? What were some challenges and how did you overcome them?
Yeah, no, that's a very good question. So you're right. So there was two kind of users who demanded stable coins because obviously those people who wanted to go and make a lot of money through some maybe speculate or find some ways to make some money on the digital economy or Web3. But we from day one we really focused on solving real problems for users, right? So of course we knew everyone has a different sort of need, but we try to identify this particular need of access. And we also targeted users who are not, after speculation or trying to, make a killing. We really wanted users who wanted the utility and access to stable coins from, financial services, right? So because one, either because they were excluded or under banked, like you said, and now because of blockchain and, all its inherent attributes, we were able to bring these financial services to them. So from day one, we exclusively focused on stablecoins, which are dollar-backed digital assets. So that meant we did not go after other digital tokens that are not dollar-backed, at least in the beginning. So it meant we were basically providing a digital dollar access, right? So now we could go and tell a user, look, instead of you going to a bank account, a bank and asking them to open a dollar account, which comes with its own, sort of requirements, documentation and all that. And for a regular user who just wants to maybe buy some goods from China for about, I don't know, $500, right? Or 1,000. They don't want to go through that long onboarding process. They quickly want to do it on their mobile phone, send the money across, the market or the world they want to, and they receive their goods. So it was very simple, sort of accessing dollars, for, maybe trading. Another use case is a lot of users in Africa were trying to save in non-volatile currencies, currencies that they would not suffer from inflation or high inflation rates every year. And so if they could perhaps at some point apportion some of their savings into dollars, they would be able to preserve some of their wealth. So specifically, that was our sort of ideal customer profile. And from the beginning, because we focused on that, we created a lot of trust in terms of our platform. So users knew very well that, look, if I buy through PhoneBank, I can only buy digital dollars, and I'm not going to, for example, lose my funds. The digital dollars don't necessarily just move around value every day. Now,
Yeah.
because of those sort of kind of fundamental values that we began with, we intentionally now also sought partners who were looking to work with us within that framework, right? So that meant we would we would not be very quick to list just any token for that matter or any asset for that matter. We went very strategically after blockchains that were well established, had communities, had already shown some positive attraction, because of course users relied upon us to do our diligence and what we provided for them on the platform. So we initially just went after maybe say 5 blockchains, and we initially just targeted 1, I think, or maybe even 2 stable coins. We started with USDC and slowly expanded to USDT as the market demanded. But as we continuously developed our platform, what happened? I mean, then we had a standalone app. We had an app in the Play Store where you could download the app, and this is where you could move your airtime into stable coins. But as the industry and the market was growing, other wallet providers were coming to us and saying, we really like what you've done with your app. Can we work together? How can we leverage the same thing? And something clicked with us. And between that period, obviously, in the very early stages of any business, you are joining accelerators, you are part of a couple of programs, which is very important at very early stage for founders. It gives you some very good community, brings a very good network as well to your business. So we were part of TechCrunch by Western Union in can't remember the cohort. You were also part of a couple of other programs, including MasterCard, CryptoPath. We also part of some blockchain programs that sort of incubated or accelerated startups that are building on their chain. One of those chains was Sell, and we were part of this program. They really loved what we are working on, and Cello had just struck a partnership with Opera. So Opera is a browser company. It's about 30 years old. It's very popular in Africa, particularly because people love Opera because it uses very, very little data when you're browsing. So Cello had signed a partnership with Opera, and their browser across emerging markets is called Opera Mini. And so they were launching a new wallet inside the browser or attached to the browser, and the wallet is called MiniPay. So one of the product managers at Opera reached out to us and said, look, we definitely would want to work with you because we really like how you've built infrastructure. And went back and thought, we've built really good sort of technology. And now it's expanding beyond just individual users, even other corporates and enterprises want to use it. So we collaborated with MiniPay or Opera MiniPay to build out sort of their first iteration of their wallet. So we were the first partner when it comes to figuring out payments. And so we worked very closely with them to develop what I can call our enterprise solution for wallets. And when they went live with their wallet, which is about maybe 3 years ago now, you could already tell the difference in terms of how they had designed their wallet, how simple it was to use, and then using PhoneBank that was very sort of localized. We had very good integrations with all the local payments. We already had learned a lot from our airtime business and stablecoins. And then now we had also already started adding now mobile money and bank transfer. So our product had quite evolved and it was very, very well designed and developed for this market. So that's how we went live with our enterprise solution with one of our partners. And then now it's not becoming sort of like a zero sort of startup. And now we're edging closer towards one because now we have a partner and Opera, to give you some numbers, they have hundreds of millions of users across the world. It is estimated they have about 100 million users across Africa. Like I said, it's very popular across the continent just because of the data. And so they had an amazing distribution. So now beyond just us going directly after the customer, we now had a partner with a crazy distribution, right? And so now you can see the product, sort of got its feet, and then it's been a very interesting journey moving from, just sort of experimenting with airtime, building our own app, and then now building an enterprise solution to a point where down the road, it's been about 3 years now, we already sort of sunset our B2C and our app. So we are no longer a B2C company. Now we solely focus on B2C. So we focus on customers and partners like wallets that have end consumers.
Interesting. Yeah, that's a fascinating story. There's a lot of really good lessons. I remember you said that initially the use case for some of the people was to preserve the value of the currency, and then you kept working with other partners, and then you found this like B2B to C route. What are some of the biggest use cases you see right now? Like from that initial one to right now, what's some of the biggest use cases you're seeing right now? And what are some of the biggest challenges now that you've gone into this new world?
Yeah. So it's very interesting how, you keep on discovering new frontiers that, you didn't think about. So after that partnership with the wallet partner, we now expanded and went and sought other wallet partners. And now we can say we serve perhaps all the global wallets that want to come into market. So the likes of Coinbase, Telegram. And so we look for partners that have the distribution across the globe and are looking for an anchor partner across Africa that already has the integrations. One of the challenges we figured out we are solving now, and I remember I said now we're a B2B2C company where we focus a lot of our efforts in talking to Opera, talking to Telegram, talking to all these wallets and trying to figure out what are the challenges that you're facing going to market, going to getting payments across Africa. And one of the things we figured out the biggest challenge, the global south, and let me focus on Africa, where we've sort of initially started our operations. It's a very fragmented market in terms of the payment rails. So I am based in Kenya. Mobile money is the most popular here. But then in Nigeria, you find bank transfers are the most popular. They'll have their 50 odd banks, right? Now, in another market, you have mobile money, say, for example, by 3 players. So those are 3 different integrations. So in the 50 plus countries across the continent, and each country having at least 3 payment channels. If you're a merchant or an enterprise that wants to receive payments across Africa, then you have to navigate easily more than 100 different sort of payment channels, integrations, and you can imagine how long that takes you to go to market, what complexities come up with that or just come up from that. And then, the challenges that are inherent to payments, right? So, sometimes a payment channel is not working. So you sort of, have to figure out what API is broken. Again,
And
for various
compliance, I'm
reasons.
guessing.
Yes, compliance as well, right? So you can imagine the complexity of compliance across all these markets. And so it just creates a very sort of high barrier if you're a global enterprise looking at the African market. So one of the biggest problems you're solving for merchants and global wallets that are looking for payments across Africa is with one API, you can connect to as many different payment channels that we have across the continent. And beyond that, now we've already figured out sort of a compliance infrastructure or layer, right? Which is more unified, and we can deal with that. We can deal with the redundancy. We can deal with the routing. We can also deal with the pricing, right? So as a global merchant, remember that there's dozens of currencies across the continent. So that creates a whole new sort of FX headache for your treasury, for your CFO, and everyone else involved. So what we are doing is with one API, we can solve for you compliance. We can solve for you integrations and redundancy, making sure you have the most reliable uptime. And then, of course, we can deal with the FX and treasury headache that you have to go through by dealing with all these multiple currencies, because we bring it all and consolidate it all to stablecoins. So this is
Awesome.
the core fundamental problem that we are solving now for our B2B partners, because we've already built that infrastructure across the continent.
Awesome. Yeah, I think that's a pretty solid moat that you have, because I can imagine like so much complexity. Like you said, every country has its own compliance, it has its own preferred way of making payments. So solving for that, obviously, there's not going to be a lot of players trying to do it. So it definitely brings that network effect over time, as well as like a very unique mode. Now,
Yeah.
switching gears a bit, what do you think about AI and its impact in your business? Do you think AI has a role to play, or what are you seeing with AI? Like, has it had any
Yeah.
impact on your business so far?
Yeah, it's that's a really good question and quite timely. So just like any other business, of course, we were following very closely what was going on in the AI space, and from very early on, we started kind of mapping out which sort of processes, which kind of operations, where exactly can AI fit in within organization, and it came more from our initial one of the things we also sort of started building from the beginning. We always wanted to build a very lean team that can obviously maximize our output. And so even today, we are a very, very lean team operating across the globe. Now, faced with that sort of challenge, or kind of a goal we had set for ourselves, we had to identify each and every place where we could make work easier, we could improve the efficiency, we could implement newer technology to sort of solve some of the problems that we were having. And so it started off very easily as we use it for basics like, copy, and for marketing and figuring out, or just basically structuring out things that are quite administrative. And then over time, now we started to build it deeply into our processes, starting all the way from our KY, trying to sort out and making sure that you are, I'll give the challenge here. So being a B2B2C sort of platform, or our platform, we are dealing with very high volume, but very small sort of ticket sizes. Now, that means if you are going to scale, something as simple as KYC, you've got to automate it, right? You've got to automate that process and making sure that every customer sort of gets a score and can quickly go to the next step. Now, beyond that, it comes also to smart routing. Now, like I said, you will definitely need to interact with multiple payment channels, different pricing, also different sort of technical ability or capability. So we will do some smart routing, making sure that you as a merchant, you don't have to think about what's going on in the backend. So every transaction will be routed to the cheapest provider who has the best uptime, and so there's various signals that we look for and making sure that we are trying to improve the conversion rate of each and every transaction. So one of the challenges of payments is just a very high failure rate for various reasons. Either at the KYC stage, either one partner is down, and so now you have to, think about how do we recover this payment and so on. And so if you automate that whole process, it's made our conversion rate to be the best in the industry and in the market right now. And then beyond that, we start to identify how can we use AI across some of our processes, like onboarding, right? So, without necessarily hiring a whole sort of team of account managers and, people and all that, we sort of cloned ourselves and figured out, okay, how can we put various agents at strategic points, and then they can interact directly with our potential customers, potential partners. Now, in this business of payments, you've got to be very strategic, obviously, even how you interact with your clients. A lot of them is relationship based. So you don't want to, you don't want that your customers only deal with an agent or an AI. So there's obviously a sort of an initial sort of onboarding process. And then before they hand over to me or my colleagues, where now we can, sort of build that relationship and support them whatever they need. Beyond that, I know our engineering team is fully utilizing all available tools in their development. We have a very solid engineering team based all over the world. And you can definitely tell our output as a company has significantly improved. As obviously you can tell we are based, so we have to be a very technical capable team with a very good engineering because of all the complexities we are dealing with in the backend. And so without necessarily hiring 2 engineers every month for the next 2 years, how can we improve the output of each and every of our engineering team to perform better? And then, of course, anyone is now capable of learning new sort of fields or getting involved. So now, you stop becoming more of a specialist and a generalist. So I regularly find myself quite engrossed in as I'm doing my business development work and, sort of going through potential partnerships, it's easy for me now to also go back and sort of craft, to do a demo for the team. And that's really helped, in terms of like, as a business person, I also now extend my skill set into the technical field, or, I can at least go some way and meet them halfway. So those are some of the
Awesome.
various ways we found to use AI for our business.
Awesome. So it sounds like there's like productivity gains all across, is what I'm hearing already. You could do a lot more things. You could do even things that you weren't necessarily good at. Now you have AI to enhance your skills. What do you think
Correct.
the future, do you have any predictions for the future? Like, what's the world going to look like in the next 3 to 5 years? Do you have any predictions?
Specifically on the AI front or just the
Yeah,
future?
AI and fintech. What do you think? Like,
Yeah.
even the crypto space has also been here for now over a decade. What do you think? And there have been ups and downs for sure in the market. Like I used to be big into Ethereum, but I don't think it has so far been able to solve all the problems it promised. Maybe it's going to do that in future. So what do you think like the next 3 to 5 years look like with AI and in your fintech crypto world?
Yeah. That's a good observation. I think I've been in the tech ecosystem, especially at this very early stage of business for the last maybe 13 years now. And I have seen the same skepticism in terms of adoption of technology. Again, technology sometimes oversells, in the beginning to build up the hype. But I have just the last 8 years, I've actively been building within the fintech and Web3 space. I think I have finally sort of seen a lot of the promises initially come true. So even in downtimes, I still have the same vision and I still work towards that vision. So for example, if you think about the crypto or digital assets tokenization, this is the first time we are starting to see enterprises start to adopt them, because a lot of the obviously licensed, regulated industries, big corporates, they had to wait until everything became clear. And so they needed clarity from regulators to be told to go ahead. That did not stop the technology at all. So what you're seeing today is sort of the initial integration of crypto or stable coins, a digital asset tokenization in the mainstream of financial services, for example. Financial services have become a sort of the poster product market fit for blockchain. And so in the next few years, we will have financial infrastructure sort of natively built on blockchain because it only makes sense to do it. And now it's already proven. Regulators are clear. They already have, all the necessary frameworks, policies, and everything they need. And so I expect there to be sort of a rapid adoption within the enterprise corporate sectors than before. Now, it may not necessarily have the hype of, the early. A lot of the gamblers and punters have probably not too excited about this new phase because it comes with a lot of regulation, a lot of requirements, compliance, and all that. And another exciting thing about Web3, which is the blockchain and AI world, they are sort of converging, these two technologies. And one of the things that excites me in the future is automation of payments, right? And, a lot of them are calling it maybe agentic commerce. So, all these different agents that can now autonomously perform transactions. Now, that to me is very, very exciting because the way financial infrastructure has been built has been very jurisdiction specific. So if I'm in Kenya, I build for my Kenyan audience and I integrate to Kenyan systems. And, it's a very sort of closed ecosystem. But with blockchain, it's global from day one, right? So even when it comes to building AI or agentic commerce, we are talking about agentic commerce on a global scale. Now, that to me is super exciting because that means users are no longer sort of limited to financial services they can find locally. They can now find them across the world. And so that to me is very exciting, the blockchain and the AI world converging. I definitely am very excited to see new business models that we've not imagined before. And I'll give you an example. So in most of these emerging markets, especially when you don't have a credit card to make payments, it creates a challenge for recurring billing. So imagine that I have to pay $5 every month for a service. How do I ensure that, if this person does not have a card, how can I create a recurring billing system or platform without necessarily changing their behavior and habits? I don't have to give them a credit card. And so AI and agents come into play here where they can act as your sort of recurring billing agent where, I can remind Gaurav every month to make sure he pays his bill, or I can collect payments on behalf of the merchant every month. And that interaction doesn't involve a card. It's outside the card network. So it's a complete new business model that is built with this technology. So those are some of the things that are exciting me a lot, especially in the field that I'm in.
Awesome. So agentic commerce everywhere, and maybe like there's going to be stable coins globally. Every country is going to have their own, and we're going to have like commerce. Agents are going to do commerce on our behalf, and like globally, blockchain is going to become the standard. Is I guess your predictions, and they sound pretty interesting and exciting for
Yeah.
sure. Like anyone can
I
do
think as well,
business
like,
anywhere.
I don't think users will know all this is happening in the backend. A lot of it will be abstracted from the users.
Mm.
Will be
Yeah,
abstracted from the, yeah.
yeah, that's when I guess technology has actually become mainstream, is when you don't even realize it's there. So amazing. Well, finally, you've gone through an amazing journey and you've found your product market fit. And like, it's amazing how you sort of pivoted from initial B2C. What are like, what are the best lessons you've learned, and what are some things you want to share with new founders that you've learned in your journey?
Yeah. Wow. There's so many lessons on this journey. So and again, I'm borrowing from. I've been involved in a couple of these sort of journeys with early stage from 0 to 1, and some worked out well, some did not work out well in the past. So I'm learning from all that. One of the things I've got to say is about timing. So in it's one thing to build when everyone is sort of hyped and something is very popular, but in the market you're building for, is it ready? So you need to figure out the timing. The biggest challenge or barrier to, especially in the global market, global south markets, is the infrastructure is not exactly at par with maybe the US or in Europe. So you've got to figure out what infrastructure do we need to build today so that in a year or 2 years' time, we will be ready when things pick up. Because obviously, trends take some time before they pick up in each and every market, right? So you will sometimes have to build infrastructure in the beginning. And then as the market grows, then you will be ready. So timing is very important. If you get the timing wrong, you could spend a lot of money, for example, experimenting without getting any traction. And maybe all you needed to do was just do the hard work. Just do the hard work. The second lesson is experimentation, right? So in the beginning, you have this great idea, you want to go to market, and you're really fixed up on it, and you really want it to work. But sometimes it can be like, for example, it can be like trying to, fix a square peg in a round hole, because sometimes you have to experiment until you get it right. So your initial idea could be great, but then once you go to market and you start getting customer feedback, the most important thing is to reiterate. Right now, the rate or the pace of experimentation will determine how fast you get a product market fit. All right. So once you try out one strategy, you try out one experiment, be ready to move on if you don't get positive feedback, or learn from whatever feedback you get and reiterate. The faster you do that, the faster you grow, and you will you will achieve product market fit sooner. So that's the second advice I will definitely tell early stage founders in terms of experimentation. And then lastly, distribution is everything, right? Then that's our biggest lesson in this market. And this is true across the world. Distribution solves a very big problem for early stage founders, especially once you found your product market fit. As a small startup, you can only reach so many people at any one point in time, or you can only reach so many users at any one point in time. So think about who are the strategic partners that you can reach out to, you can work with, that can help you reach as many users or as many customers as you need. And then you can replicate that model. Now, getting out to distribution partners is sometimes it has to be it's not scientific. I mean, it has to be informed, obviously, right? Because you have to have your target potential partners to work with. Now, you must have at least, I would say, 3 tiers. You have tier 1, tier 2, tier 3. So tier 1 is your ultimate sort of golden partner that you definitely want to nail. And then tier 2 is maybe a smaller partner who you definitely would want to work with, maybe at a smaller scale. And then tier 3 would be other companies that are not necessarily corporates or big enterprises. They could be startups like you, or could even be a bit older. And those are the best to sort of start talking to in the initial stages. They will prove your model, and then you will get the confidence and the traction that you need to go to your tier 2 and tier 1 customers, right? So think about distribution from the beginning and start working on those relationships, as you build towards from your tier 3, tier 2, and tier 1 partners that you want to have.
Awesome. Yeah, I think these are all amazing advices. I think the first one you touched on was like you need to have the vision and you need to nail the timing. Basically, you need to have the vision that you need to work hard and maybe in building infrastructure so that you're ready when the timing is right. And then I think the next one was, what was the second one around? I remember the third one is distribution. The first one is vision.
Yeah.
And then I think the second one was also pretty amazing. What was the second one around?
Sorry, distribution, partnerships, and I blank out now.
Sure. Anyways, yeah, I
The
think
first stage, yeah.
but yeah, all of these are like the rapid pace of experimentation.
Oh,
So
yes.
like,
Sorry, yeah. It's at the very early stage and getting product market fit.
yeah, so I think all of these three are pretty golden advices for anyone starting out right now. Well, Duncan, it's been a pleasure. Thank you so much for sharing your story. I think what PhoneBank is building is amazing, and hopefully PhoneBank is going to revolutionize the world of fintech for everyone in future. And all the best, and thank you for joining. It was a pleasure.
Thank you so much as well for hosting me here. It's been a pleasure sharing the story of PhoneBank and our journey here. All the best to the entrepreneurs watching, and looking forward to catch up again.